Hello, this is Brian Shannon from AlphaTrends.net. Today is Tuesday, June 3rd, 2008. The market's closed and we had a little bit further selling here today, but we did get a little bit of recovery towards the end of the day. The market was down 78 cents or 0.56% here on the S&P 500. You can see that it briefly made a lower low to complement the recent lower high. So officially, you can call that a downtrend. The volume was big today, and we see that on the 1-minute time frame, the biggest volume came actually as the market experienced a short-term rally that occurred just at about 3 o'clock Eastern. You saw that big volume rally was followed by a low volume pullback, and then it got back up to the daily VWAP, but then found some more sellers there late in the day. So it looks as though maybe the market is trying to find some stability here right along that 50-day moving average and the recent uptrend line. You see how that uptrend line was broken, and as was the 50-day moving average. But the direction of the 50-day moving average, perhaps there's still some buyers in this area. So it seems as though maybe just a little bit more neutral market setting up in here for now. On the 10-minute time frame, you can see that, as I mentioned yesterday, this was an important level. Near about 139.30, 139.40 or so, and the market broke down from there, rallied up a little bit in here early on, but then really just began to sell off hard. And again, on the 1-minute time frame, you see here, once it really broke the morning lows right at about this point here at 1:30 Eastern or so, that's where we saw the real exit to the in the S&P 500. It did make, again, a lower low in here, but it didn't close below there. And I've been saying that for this market to break below and hold below 137.75 or so could have a bigger impact. They could see the market sell off down towards maybe these lows here near the 133 to 134 level. So we're not out of the woods here, and I still think that it's more of a trader's environment than anything. If we take a look at a couple of the average prices. For instance, the average price since the Bear Stearns low, if I drag my VWAP tool straight across, you can see the average price actually is right there at about 137.05. So that level seems to be important right in here at about 137, let's just call it 137.25 or so. That's about the average price since the Bear Stearns low, since the first sell-off low in January, and then the actual, since the beginning of the year, the average price that the S&P 500 is traded at is about 136.04, which puts the buyers slightly in control here. But again, we're at this bigger battleground here on the weekly time frame, so really continues to be no reason to be aggressive on either side. I think the weekly time frame, though, with it being is negative as it is here, potentially heading for another leg lower. You've got to just be very cautious and very quick to admit any mistakes when the market shows you a loss. The Russell 2000 still kind of toying around this 200-day moving average area, but stays stuck below it. But again, today it was only down 0.3%. It was down 22 cents, so not bad at all. Although you see the intraday action was very volatile, and when the sellers came, they came in very quickly here too. Looking at that 1-minute time frame, you can see again at about 1:30 Eastern, that's when the sellers came, and they came in hard here. And then just at 3 o'clock, that's when we saw program buyers come back into this market here as well. So for now, it's just still kind of more neutral than anything on the Russell 2000, and the financials, did break to a lower low in here, but they seem to keep finding a little bit of buying in there that holds them up. So for now, it's a broken market that probably needs a lot more time to heal itself, and not much edge in trading the financials, it appears to me. The Dow really, was my reason for coming into this week much more cautious. And I usually don't look at the Dow, but I had noticed it last week at this 127.50 level, how important that area had been as far as support here, resistance for several months as the market tried to recover. And then on last Thursday, it touched upon that level again, found sellers, and that's where we've seen this larger sell-off occur in the Dow Jones Industrials. And you can see that this market did what I was thinking it might do, is rally up just a little bit and then further sell off. That's what we saw here today, and this market still remains the weakest, so keep an eye on this. It couldn't recover back above the recent lows here, so The Dow gives us more reason for concern than any other major market index. It's clearly, shown this pattern now with this high here being lower than that one, and then this high being lower than the prior one as well, that we've got this pattern of lower highs and lower lows, and you've got to be very cautious. Perhaps it's coming into some support near 122.5, but that's definitely not a reason to buy, especially when you have, again, the same type of picture on these weekly time frames, where we have these prior levels of important support that were broken. Market rallies up to that, finds sellers, and it's just not a good picture for the Dow Jones. The Nasdaq continues to be the strongest of any of these markets overall. It lost 0.5% today, and we see perhaps a lower high setting up in here, but a lower low wouldn't confirm until it breaks down below 47.75 or so. And again, this market, realistically, you got to look at, I think, more as range bound, $48 to $50 a share. It is reason for potential early warning for some concern that the market looks like it's making this lower high here, but really not. I wouldn't expect any damage, real severe damage done until and unless this market breaks below 48. That would break this uptrend line as well, and that's probably where this market's going to meet the 50-day moving average for now. So I think more than anything, it's probably the Nasdaq is just more neutral right now.